Good morning, this is Richard Pears from Finextra TV, and I'm joined today by Giel Linthorst. Giel is the Executive Director at PCAF, which is the Partnership for Carbon Accounting Financials. Good morning, Giel.
Yeah, good morning, Richard. Nice to be here.
How are you?
I'm fine.
Yeah, good to have you on today. We've been chatting on and off for, I don't know, it seems quite some time, but
yeah.
So delighted to have you on today. And obviously a big announcement going out today, so we're delighted to have this interview to coincide with it. Really what we're talking about today is how banks manage the carbon impact of their loans and investments. But tell us more, who are PCAF and what are you all about?
Yeah, thanks. Happy to explain. PCAF is an open collaboration of financial institutions of any type. So banks, asset owners, asset managers, insurance companies, development bank. And this collaboration started 5 years ago. And it's all about standardizing the way financial institutions measure and disclose the emissions related to their loans and investments. So measuring financed emissions.
Right. Okay.
Because that is key to steer investments, to steer your portfolio towards a low carbon future.
So when you looked at this, 5 years or so ago, probably beforehand, what was the problem that you identified within the system, if you like, that you felt that this was needed to achieve?
Yeah, so the problem really is that, well, of course, the greenhouse gas protocol was out there in 2011 and provided a limited guidance for financial institutions to measure emissions. So financial institutions around the globe started developing methods themselves and applying that and reporting on those methods and the emissions related to those methods. But there was no harmonized global standard available. So we have seen financial institutions report on several metrics using different methods, and it was not consistent. And in that sense, there was no transparency or comparability between those numbers. So getting that right, getting a harmonized, consistent standard out that can be applied universal by any type of financial institution was key. And that was the driver for PCAF to start creating this. And started 5 years ago in the Netherlands, and now it's a global group of more than 75 financial institutions that collaborate, build this global standard and implement it to report on their finance emissions.
And so give us a sense of, I know you said it sort of came out of Holland, as most things seem to do in this particular area, and it's gone global. What's the names of a few of the organizations involved? What's the organizational function behind PCAF?
Yeah, it's led by a steering committee, which is a group of leading financial institutions. And so we have ABN AMRO, we have Amalgamated Bank in the US, we have Triodos Bank, we have ASN Bank, both are based in the Netherlands. We have the Global Alliance, Banking on Values, which is a network organization of value-based banks. And also over summer, we have added Morgan Stanley to the steering committee. And we will also add the Net Zero Asset Owners Alliance as initiative to the steering committee, as well as a bank in Nepal, to complete the diversity of this initiative. Because we are global, we are relevant for any type of financial institution, and that's also how we like to compose the steering committee. That steering committee is responsible for the overall management of this initiative. Next to the steering committee, there's a core team being set up and that core team consists of 16 financial institutions at the moment, and we'll probably add a few more going forward. And the core responsibility of this core team is to develop this standard. And on the 4th of August, the draft version of the standard was published. It's under public consultation at the moment till the end of September. And we aim to launch this first version of the standard in November at the London Climate Week. But this core team will continue because this is the first version of the standard covering 6 asset classes. We will continue and add asset classes next year in collaboration with, for instance, the Net Zero Asset Owners Alliance. But we'll also refine methods because there is more experience globally on implementing these methods. So it might happen that, for instance, our partners in the Asian market say, well, we have to refine because this doesn't fit to our Asian context.
So let me ask you a question. There's a lot of standards out there. People hear about SASB, TCFD, in particular. Of course, there are many others. Why another one? What does this do for people? And how do they implement it precisely? What do you give them that makes it implementable for people?
Yeah, that's a very good question. I get that question often, and I see is that the TCFD, the SASB, GRI, all those type of frameworks, reporting frameworks, you could say, require a disclosure of emissions, but don't describe in detail how to quantify those emissions. So PCAF is really providing how to do it. PCAF provides accounting rules, technical accounting rules, how to measure emissions for a mortgage, for a real estate, for a business loan, for a listed equity and bond, etc. So you need those consistent accounting rules to measure and aggregate it to a total finance emission number that you can report into a CDP, into a SASB, into a TCFD. So that's where I think PCAF fits. So it feeds into those other reporting frameworks.
And are you giving them a tool so that they can sort of say fill in the PCAF spreadsheet kind of thing, or do you just give them but you give them the framework and the scope of what they need to do?
Yeah, this is all open source. Everything is publicly available. We are building a global database as well to enable financial institutions to get started with data sets for all types of asset classes, global. That database will also be publicly available. It's now under beta testing, but I think how I view it over time is that this standard will live on its own. It's in that sense not rocket science. It's just about attributing emissions from a company, from a property, from a project, how to attribute those emissions to you as a financial institution. And same like the greenhouse gas protocol, we feel that this standard will also over time live on its own. Right. And that there will be an ecosystem of data providers, of consultants, that and also the financial institutions themselves. And we see that many financial institutions that have started this needed some support in the beginning, but they build up the capacity themselves and they do this form of reporting themselves in-house, and they have the capacity to do so.
And does this map into things like the EU taxonomy, obviously in linking through into the European Sustainable Finance consultation paper. Is there a nice mapping between what you're doing, although you're down at the implementation level, it all fits, does it, or that's part of the process that you're on?
Yeah, so now with this first version of the standard out, we see also interest from regulators, from policymakers to link this to their upcoming regulation, and it also relates to many upcoming regulations already in the EU. For instance, the core team has been quite active and engaged with the EU Technical Advisory Group to understand the metrics that they have been proposing for the benchmarking system. And PCAF has decided, the core team has decided to incorporate the same definitions and the same metrics for accounting as recommended and adopted by the EU Tech. So there is already a clear link, and also with the taxonomy defines what is green and what is not green. And most of the taxonomy is based on emission thresholds, so emissions over a ton of steel, emission over a kilowatt hour.
Yeah.
And all emission based thresholds, emission-based targets relate to a form of emission accounting for financial institutions. So it really connects to also EU taxonomy.
Have you had anybody that, if I know you've been going 5 years, you've had some foundation banks. Can you sort of point to anybody that's used this and some of the sort of outcomes or lessons, insights that they've seen by applying it to their loan book?
Yeah, there are some nice case studies as well on our website, what the financial institutions learned when they started this process. But what I've seen so far is that, first of all, it starts with getting an overview of the emission levels across the financial institution. Because you see also initiatives and methods out there being applied to a few sectors, which is of course relevant and valuable, but it often relates to a few people, a small department, you could say, within the full organization. Well, PCAF, as it covers multiple asset classes, it also is relevant to a large group of bankers or investors within firms. So by doing measuring finance emissions and putting these numbers out, disclosing it triggers an internal discussion that covers many colleagues within a financial firm, and that change process is really key, because in the end, I think we need all bankers and all investors to have incorporated a climate-related mindset into their banking and lending and their investment activities.
Well, they're going to have to do it as part of the sort of FSB, TCFD, stress testing and so forth. So the question is really, how do they implement it, which is what you're helping with. Let me ask a final question. I mean, there's the old adage with data is, rubbish in, rubbish out. How do you make sure that the input data that they're getting on the emissions from, let's say, that property portfolio, the data is of good quality, and how do you verify that as PCAF?
Yeah, good question. The data issue is always a challenge. I think for any initiative, data issues are a challenge. But what I see is the strength of PCAF is the collaboration, because we all have this issue, this data issue, and only by collaborating with multiple set of financial institutions of various types, but also collaborating with governmental agencies, is key to get access to better quality data. And that's also the strengths of PCAF. By collaborating, you can start this discussion with governmental agencies to get access to additional data. And within the PCAF standard, also data quality is scored, which is, I think, an interesting system that has been developed over the past years to score the quality of the data. And by doing so, financial institutions get an additional instrument to steer on the data quality. So some financial institutions start measuring emissions using indeed proxy estimated data, but that helps them already to understand the level of the emissions, but also helps them to develop a strategy to improve data quality over time. And that is enabled by this data quality scoring that is part of the standard and part of the way financial institutions should measure finance emissions.
Okay, cool. And I assume therefore things that as they come on stream, we talk a lot these days about satellite data, and the different forms of satellites can look at many different sort of signals, such as methane and heat and goodness knows what else. All of these can be, I suppose, correlations or ways of comparing data to check against the benchmark, the proxy, the self-reporting. Do you sort of see the system as is going to be flexible enough to be able to incorporate new streams of data as they come on board?
Yeah, so yes. PCAF is all about accounting rules, and well, whenever there is better quality data, financial institutions, we enable and encourage financial institutions to use that data.
Right.
So we don't prescribe what data to use, and you see also that financial institutions use multiple data sources to do the accounting. So often they combine proxy data with data sets from companies, reported by companies themselves, or from data providers. And that's also, I think, very much needed, because there are sector-specific initiatives that enable better data quality, and that data should also feed into this assessment. So.
Right, so you take multiple data sources to give that nuance, but then you standardize it at the accounting level, and then obviously you can issue it out at whatever the reporting requirement is. Yeah, interesting. And what next? How can people get involved, Giel?
Yeah, it's an open source collaboration. It's free to join. It's the initiative is fully funded by philanthropies. So people can sign up to this initiative by committing and signing the commitment letter, which is on the website of PCAF. And by doing so, financial institutions commit to measure and disclose their finance emissions within a period of 3 years. So we also give financial institutions a period to get acquainted with the methods, to sort out the data from their end and the emissions data, and to do the number crunching, and to gain confidence into the overall numbers before they disclose.
Right.
And to clarify, we see also that financial institutions that start disclosing disclose a certain coverage, a certain percentage of their portfolio. And we require also financial institutions to disclose that coverage rate. So at the beginning it could be 20%, and the next year it could be 50 or 70%, and moving up to 100% over time for the asset classes that are covered under the standard.
Gotcha. Fantastic. Well, look, that's been really helpful, and really good to understand that this is a practical method of implementation for people that are sort of, somewhat bewildered at the blizzard of initiatives going their way. So this is really a sort of much more precise set of tools. So I hope you'll come back and tell us a bit more. You'll help us share the news. But for now, Giel, thanks very much indeed for your time.
Yeah, you're welcome, Richard. Thanks. Bye-bye.
Thanks. Bye.